Once again, good afternoon, everyone. I hope all of you can hear me. If any of you cannot hear me well, or if you're probably not connected to the audio, if you think you're not hearing any noise or sound for the last 15 minutes, which means you have not turned on the audio, so I request you all to either turn on your computer audio or use the phone coordinates that I've entered here on the chat. The topic for today's webinar is Trust and General Reconciliation Demystified. So this is a CPD webinar, and it's accredited to 1 hour of professionalism CPD. I request all of you to use the phone audio for better clarity and quality of the audio. And at any time, if you're feeling that my voice is not audible or it's not clear, I request you to keep me posted on the chat window. So since this is a CPD webinar, we're going to have a set agenda like every other webinar, but this is going to be more confined to the agenda. And any questions, I would love to answer all of it towards the end of the session. So I request you all to keep accumulating your questions on the chat window, which I would be answering towards the end of the session. I know today's topic is pretty intensive. It's quite, important, or rather very important. And this is something that all of us want to focus on. And definitely trust and general reconciliation is something that is always running behind our mind. You know, it doesn't let us be in peace if it's not reconciled, if your bank accounts are not reconciled, or what should I be doing to make it work and to keep it reconciled and be compliant with law society, and at the same time ensure all my financial transactions have been recorded and reconciled. So this could be as simple as a 10-minute work, or this could take as complicated as a 2-hour or 3-hour work. But we're going to see how simplified we can make it for you to complete the reconciliation without any complexity. That's the agenda in a nutshell. But to go over the agenda that we have, we're going to see how the process of reconciliation happens and what are the steps or tasks that goes beyond and prior to doing this simple reconciliation, because reconciliation is as it is a 3 or 4-step process. But what goes prior to that is, I would say, more intense and lengthy, depending upon the volume of the transactions you transact in your bank. So we're going to see all those as part of the reconciliation process. And of course, whether using either your manual data entry system or in a simple Excel spreadsheet, or maybe if you're using a legal accounting practice management system, we're going to see what are the various tools that you can use to keep yourself compliant by reconciling your books month on month. And of course, it includes both trust and general, or trust and general is also called as operating account, depending upon how you address it and how your bank addresses it, because some banks have general account on the top of their bank statement and some has business operating account or something. Just don't get confused. Both are the same. So we're going to see reconciliation for both these accounts, how it works and what goes behind it. And of course, how you can make sure to be audit ready, because I think when reconciliation happens, it involves many other accounting ledgers as part of the reconciliation process. And end of the day, you're definitely audit ready if your reconciliation takes place at the right time. So we are also going to see, as I would say, bonus of reconciliation, we're also going to see a little checklist that I'm going to walk you all through for being audit ready. It's definitely not just keeping yourself compliant, for which you need only reconciliation statements, but you also need a few documents beyond that. So we're going to see what are those as per the checklist Law Society has given us, and also some core aspects of being audit ready and what are the processes that goes behind it, keeping your documents ready and having your transactions being entered in a timely fashion, and also making sure that all your bank account transactions are captured in your system, either in the spreadsheet or in the automated tool that you're using. We're going to see everything that goes behind the scenario. I hope all of you have your notes ready for the next 1 hour or 55 minutes. That's probably what we're going to see in today. I'm going to repeat the topic once again. It's trust and general account reconciliation. Just for your purpose of seeking CPD credits, please make sure to note the topic. The topic is trust and general reconciliation demystified. And it's accredited to 1 hour of professionalism CPD credits. So kindly make sure to make a note of that. And of course, towards the end of the webinar, I would try and input the details here on the chat window for you all. All right, so going a little further into the agenda, or rather detailed into the reconciliation process, what goes behind reconciliation is pretty simple, I would say. If you're following a set rules and procedure to have these transactions inputted into the system. So when I mean these transactions, what are these transactions? These transactions are basically what you see in your financial institutions statements, which is called bank statements. So the reconciliation process is comparing the bank statements provided by your financial institution with that of what you have recorded in your books. It could be, again, a simple spreadsheet that you have maintained for trust in general, or it could be a manual data entry, double entry bookkeeping system that you're keeping on a book, like a physical copy of a book, or it could be a legal accounting system. I know that there's very few percentage of people still who maintain physical books. Everyone's going computerized, digitalized. It could be either a spreadsheet or an automatic tool that helps you to keep your books intact with the recording of these transactions. Whatever is the method that you use. The reconciliation process is nothing but comparing the two statements, which is your financial transactions that you've entered in your books with the bank statements that your financial institution has provided. And while this comparison takes place, you are basically analyzing all that deposits and withdrawals that took place at your bank has been recorded under the respective client's trust ledger. Currently, we're discussing about trust reconciliation. So understanding your accounting system is definitely important, followed by ensuring all the transactions that you see on your bank statement for a specific period of time. Let's say the reconciliation happens month on month. That's what Law Society prefers all of us to do. It could be a specific date of the month, could be 23rd of the month or 25th of the month. It depends on your bank. It depends on when your bank provides with a statement. Some banks work 20th to 20th. Some banks work a month beginning to end of the month. And but end of the day, you are having to take a specific date and follow that date as a cycle for every month. So let's say, to keep things simple, we do 1st of August to 31st of August. You have to make sure when you look at the bank statement, you have all the deposits and withdrawals that is seen on the bank statement has been recorded under the respective client's ledger. Anything that you do not see on the bank statement but is there in your books, it means that these are outstanding withdrawals. You have issued a check to someone who has probably forgotten to deposit or who has not yet deposited, which means the check has not cleared in your bank. That is some reason why you're not seeing the check that you've recorded under the client Michael's file. Maybe you refunded his retainer, but he's yet to deposit it into the bank. So you are still seeing the refund retainer in your trust account as a trust payout or a disbursement from trust, whereas you do not see that withdrawal of trust payout in your bank, which means that there's a pending withdrawal, uncleared check that needs to be cleared, which will eventually be cleared in the bank. Maybe he deposits it on 1st of September. That's probably when he found time, whereas you issued the check for 27th of August. So these are certain things that needs to be made as a note somewhere on the client's, of course, on the client's notes or in your reconciliation notes. Now, this could take time for you all to identify. Sometimes it could be on top of your mind. Maybe it happened only this week, or maybe if it happened in the 1st of August, but if you have failed to remember it, there's no harm. You're just going to track down on the client's ledger and identify what is the issue, and then you will be able to eventually get to a point where you identify the outstanding deposit or withdrawal. So any outstanding, I would suggest make a note of it while you're issuing the check so that you know what is the check number which has not been deposited yet or which has not been cleared yet. Okay, so there are these small things that matters a lot. I think it'll make your reconciliation process more simple. And end of the day, the summary of balance has to match with bank and your books. So it is step number 1, as you see here, the reconciliation for trust has been divided into 4 parts. Step 1 being recording the bank balance as per the bank statement. So your financial institution provides you either with the physical copy of the bank statement, or if you've signed up for a paperless bank statement, you probably have to log in online and download the e-statement. But end of the day, any form of statement would have the bank balance as on a specific date. And when you find the bank balance, make sure it's the closing balance. Enter it against the balance as per bank statement. When you have the balance as per bank statement, first thing you want to reduce from it is all the outstanding checks. These are probably checks that has not been cleared in the bank as on 31st of August. Maybe it could be cleared, like I already mentioned in an example prior, could be cleared on 1st of September or any other date following to that. Reduce any outstanding deposits. You're going to add any outstanding deposits, which means that, for example, you have been given a deposit, maybe let's say a retainer, okay, and you have forgotten to probably deposit that retainer into the bank as on that specific date. Let's say you got reminded of it, and you have later on you're depositing into the bank. So you have to, and it'll take probably 24 hours to 48 hours to get cleared or to reflect on your bank statement. So, which means it's eventually going to be cleared on 1st of September. So as on 31st of August, you still have to add the outstanding deposit and any bank error, which means there's a discrepancy of amount that bank was not supposed to deduct from your trust account. However, they have deducted it. I see this happens a lot in the trust account with certain banks, which does not know or which has noticed to understand it's a trust account and no bank charges should go through that account, but instead they have debited your trust account with the bank charges. It is totally a bank error. You do not notice it until 31st of August. And suddenly, 31st of August, you find this as a bank error. What is it that you can do? The first thing you would do is move the money from general to trust, or talk to the bank and ask them to debit your general account with that bank charges and credit it back into your trust account. However, all of this happens on 31st of August, but it only reflects in your bank statement or in your financial institution on 1st of September again, or later date. But as on 31st of August, it's still a bank error. You have to record that bank error. You have to make a note of that bank error. Only then you will be able to reconcile the mixed trust bank balance. So mixed trust, pool trust, they all have similar understanding. Just so that for your your clear understanding, pool trust or mixed trust, nothing but a pool of funds of your client's funds into the trust account. They're not your money until you have invoiced your client and moved it from trust to general, which is the revenue that you generate. But at the time when you have received it as a retainer or as any other deposit, let's say settlement payment deposit, or a real estate transaction takes place, it's probably a mortgage loan from the bank, whatever it is, pool trust or mixed trust, unless and until you invoice the client and you can move the money from trust to general, it is not your money. So just to make sure that you're following the steps that we are discussing here, step number 1 is to ensure that the bank balances have been captured and the outstanding checks and outstanding withdrawal has been recorded, identified and recorded. And step number 3 is client's trust listing. While you arrive at the reconciled balance, it gives you the total. Let's say, for example, as you all see on the screen before your computer or in front of your computer, that there is this $1,715.30 as reconciled trust balance, which means that is all what you're holding in trust now, as on 31st of August. And the trust listing provides you the breakup for that amount. It gives you how much each client, it could be only one client holding all the money, or it could be several clients holding that money. So as you all see here on the step 3, client's trust listing is nothing but having a summary of balances of all clients. Let's put it that way. All right, so it provides the balance of each client and the last date of activity. You all see on the step 3, it very clearly provides file name, which is client's name, and then last date of activity followed by the amount. So it's very important to note down the last date of activity for a couple of reasons. Number 1, you yourself know that nothing has happened in this file after such date. And number 2, when you're being audited, or if you're being audited, you can be questioned. Why is this money lying in your trust for so long? Could be for more than 6 months. So Law Society will ask you for a reason, and you can always keep the answer ready. It could be for a genuine reason where they are probably going to return to you, or it could be for a reason that you've forgotten to give back the money to your client, like refund the retainer or something. Or it could be for a very simple reason that the file work has not yet begun. So, it's easier for you to bifurcate the reasons. So hence, it is very important to make a note of the last date of activity in that client's account. And lastly, the trust comparison, the reconciled bank balance and the unexpended balance as per the client's trust ledger provides you with the transactions of mixed trust bank balance as on a specific date. So that's probably what it takes behind the scenes, I would say, of reconciling a trust bank account. Even though it is simple, even though it is a 4-step process, but I think what goes behind it is more. So kindly ensure that you follow a timely manner of data entry, follow and understand your accounting system. Have an accounting system that would make your life simpler, not complicated, not time. It has to be more time sensitive, I feel. I know we're all, pretty occupied with whatever we are doing. So if you want your books to be maintained well, I would say choose an accounting program that would benefit you from keeping these, reconciliation processes simple at the same time as per Law Society compliance. The document that is generated has to be in the format or in the order in which is required to be. So make sure you are doing your homework to identify a system, and that is going to be helpful for you in the future. All right, so moving on to the next one, which is reconciliation for general account. As it is, I think the reconciliation process that we discussed about trust is a 4-step process, but when compared to general is only a 3-step process, because general is it's not a pool of funds for like how trust account is, right? So general does not have any client's money, as in whatever money you're transferring from trust to general is what is your revenue, is what you've invoiced your client for. So there is no step here that is seen as rather client's trust listing or something. It's very straightforward. It has bank balance as per the bank statement, followed by any outstanding withdrawals or deposits. And then you are able to arrive at your bank reconciliation when compared to that of your ledgers that you have prepared for each of these expenditures or any income as client payments that you receive into your general account. Again, it is an accounting procedure that demonstrates your records from your books of accounts when compared to that of your general bank account, right? So make sure the reconciliation process helps you compare what is recorded in your system versus what is provided in your financial institution, which is in the bank statement, which is actually what has happened in your bank, right? So keeping track of those outstanding withdrawals or payments or deposits or receipts is primarily very important. And recognizing any discrepancy, right? If there's any duplicate charges, if you've made an office expense and it has been charged twice, How do you record them? You are eventually going to have a refund into your general account, but in such scenarios, my suggestion is to record what is exactly happened in the bank. If it has been recorded twice, you would go ahead and record it as the duplicate transaction also, but eventually you will give a credit memo to it when that refund has happened. So that way you follow the exact, or a copy of your bank statement is created under your respective accounts. And making sure all of this is done, I think, on a fairly good time interval, even though the Law Society needs you all to reconcile your bank accounts once a month. I would say, I would recommend you all to do it at least once a week. So now, I know that once a week is a little too much, but trust me, when you do it once a week, there's going to be two things that is going to be taken care of. Number one, your books are going to be much more, simpler to handle by end of the month. You know that you've already reconciled it 3 times on a weekly basis. So when you're in the 4th week, when you're trying to do the entire month, it's going to be nice and clean. And any errors, any Hello all, can you all hear me now? I'm sorry, I'm not sure what happened. This is so deja vu because the last time we had the same webinar, I think uLaw decided to kick us out at that time as well, but I'm not too sure it's happening again. Sorry about that though. Yeah, I'm genuinely, not sure where I missed or where you all missed me. Can one of you just put on chat if you all heard me while talking about reconciliation for general? When was the last time you all heard me? Is it probably when I was talking about reconciliation, or just tell me for last 5 minutes or 6 minutes maybe? It would be helpful. I could go back. Hey, maybe you know what? I'm assuming it's definitely not more than 5 minutes. Otherwise, one of you would have brought it up. So I would. Last thing you heard was about why doing reconciliation every week. Oh, okay, that's not too far. So I was probably in the general reconciliation. Thank you for that. One of the viewers, so helpful. Okay, so yeah, I was talking about why doing reconciliation weekly. There are 2 reasons. One, like I said. It's definitely going to make your job easier when you're in the 4th week while doing the reconciliation for that month. And number 2 is if you have any discrepancies or if there's any bank error, you are definitely able to identify it at that point, let's say at 20th of, definitely you're going to catch it before 25th of the month, because that's the last day Law Society says you have to reconcile before for the previous month end. So if you're in August, by 25th of August, right, like by yesterday, all of you should have reconciled for 31st of July. So which means that you would be able to identify any error and fix it before 31st of August, so that you don't carry your error for your August month reconciliation as well. So that is one point I wanted to highlight or notify. Catch the error as early as possible. Do not wait till end of the month, or even don't wait until 25th of the month to do the reconciliation for the previous month. I would say, like I said, if you do this weekly reconciliation, you're going to be safe. And if you're taking a program like uLaw, rather considering a program like uLaw, we have something called preview reconciliation or park reconciliations, where you can actually preview the reconciliation for each bank account for the specific week and or even a specific period of time, and you're able to park the reconciliation for that period of time, so that when you come back to it, all the items that you have parked under the reconciliation would be in a different color. So everything you have added after that, or everything that you have not reconciled in the preview stage, will show up in a different color, so which is easier for you to identify and reconcile at that stage. You know, these are all the new items you've added after you preview reconcile, right? So this is going to definitely make your life much simpler. So I encourage, if you're all existing uLaw users, I encourage you all to use this feature, that is preview reconciliation or park reconciliation, and then you can thank me later. If you're all not, then I'm sure this method can be done manually also. It is nothing but manually or through an Excel spreadsheet, where you just have to make sure that you make your reconciliation into 3 parts or 4 parts and try to do it for that week, and then you will be more safe and you feel more secured, because the complexity level is definitely going to be, maybe new or even, less, because you know that end of the day, your accounts are going to be reconciled if you do it in parts. Okay, that's one of the suggestions, and it has worked for many clients. Okay, so that's one thing that I wanted to talk about while we are all in the reconciliation stages. Now, coming back to the reconciliation of general, this is one step left. There is no point trust listing, as you know, all of this is mostly your money, or actually your money, because it's after you generate the revenue from trust, you move it into general. So it's all your revenue minus all your expenses gives you profit and loss, right? So I know the emphasis is more on trust, as it's more sensitive area, and it's for the purpose of audit, and any errors or misappropriation at that account is handled with more care and more, I would say, alarming effect than the one in your general account. However, I would place equal importance to general account reconciliation for various reasons, of which one or two that I can quote is you have more hands-on with your revenue and your expenses. You're able to understand what is either the profit or if it's a loss that has been incurred in your business from the operating standpoint, and you're able to arrive at what money is spent and whether you would need to, kind of reduce on some expenditures or etc. I mean, last but not the least, definitely your business hygiene is being, measured while you're doing your general account reconciliation. And I also know many of us don't have to use trust account for getting payments. They also equally use general account to collect client payments. So general account reconciliation is also part of the compliance documents as asked for the Law Society purposes. Besides that, it also provides you with your other business revenue and expenses report that you need for your tax filing or your, HST report, for example, that you would be creating. All of these form part of other documents of Law Society compliance, even though they're not as part of the reconciliation, other than the trust and general reconciliation. Remember, we discussed in the agenda that there are going to be more documents that we're going to see in the checklist that is going to be required for your Law Society compliance. So definitely having your general account reconciled is going to help you maintain your books as part of other documents that we're going to be seeing in the future. So there's 3 steps here for the bank reconciliation for general account. The step number 1 is the balance as per the bank statement is same as the step number 1 in your trust account. So knowing your closing balance for that specific date that on which you're reconciling is important, and knowing all your deposits and withdrawals as per your financial institution that has been recorded in your respective client account, or since this is a general account, all your office expenses and any other income, mostly notary charges and etc., they are all recorded under other income. If you have any investments and you have dividend from it or any interest income, etc., right? So all of these are part of general account. So all your outstanding withdrawals and payments or outstanding deposits and receipts need to be recorded in a timely manner, so that this 3-step activity is being completely taken care of, and you are able to arrive at the reconciled account balance as on a specific date. So that is about general account reconciliation to all of you. But how to prepare reconciliation, I think it's very common that all of you have a set date, like I already mentioned, entering the date or knowing which date you want to reconcile, that month-on-month date, and knowing your bank balance and clearing it in your books or in your accounting software, where all the deposits and withdrawals are cleared one by one, as you all see in the screenshot here in front of you. When all of these 3 steps are completed, you will have the reconciliation option, or it will be reconciled if you're doing manually. The totals will match with what your bank statement is showing end of the day. The date on which you have recorded could slightly differ from that of the bank date. So you can always make sure both of these dates are noted so that the end period is going to be as per the records of the financial institution. Make sure if you have not added any transactions, if you have missed any transactions, at this point you will be able to find it. And this is where the preview reconciliation or the park reconciliation comes into role. It plays a very vital role where you can, you don't have to lose the reconciliation or you don't have to lose the data that you have so far reconciled. So you quickly park it and you identify you missed to enter a deposit or you missed to enter a withdrawal. You quickly park the reconciliation, go back into that specific client and enter that retainer or enter that disbursement. And then you can come back into your reconciliation page to complete the reconciliation. So inserting that event may not let you lose the reconciliation. I know many of you do it yourself. Some of you do it with your bookkeeper. Some of you take, maybe your assistant's help. But whoever does it, I think it is important to identify the missing transaction, catch any differences between bank statement, compare the two, And if there is anything that is missing, park the reconciliation quickly and enter the missed deposit or withdrawal, and then process the reconciliation. This will reduce the complexity involved, right? That preview and park is so important. I'm just taking this opportunity to tell all of you, if you are a uLaw user, you are going to be definitely benefited out of this feature. If not, no worries. Try to utilize this in a very, I would say in a fashion where you're not going to let anything slip through, and you're going to be on top of all the entries line by line in a low manual method that you're doing, making sure that all the transactions are inserted in the respective dates is totally important for you to ensure that the reconciliation is completed without any trouble. All right, so when all the above three are completed, you will end up reconciling the respective bank accounts. Now, I'm just going to quickly pause here for a second. I know this topic is a little intense topic. I'm sure all of you have benefited from the last 35-40 minutes of our discussion. But just quickly pausing here for a moment to let you all know that the topic for today's webinar, repeating again, I'm sure none of you would have missed it still, trust and general account reconciliation demystified. That is the exact name of the topic. I will definitely enter it towards the end of the session. The screen is currently being shared. I don't want to pause it. However, please make a note of it. Trust and general account reconciliation demystified. And it's accredited for 1 hour of professionalism CPD credits. We only deliver professional CPD webinars, or rather professionalism CPD credits are provided by uLaw. So please make a note of that. I'm sure all of you are going to be benefited from today's session. We are almost 8 months into this year, 2022. I'm hoping all of you have been reconciled up to date at least till 31st of July. If not, I request all of you to spend some time and do it over maybe this weekend or the upcoming long weekend, but try and keep yourself up to date with your reconciliation. I think that would give you a big peace of mind. All right, so how will reconciliation help? I just gave you a small pep talk about it, but besides that, how is it genuinely going to help you all? Just for the records, the reconciliation definitely is going to take care of two major issues. One being, it catches all the transactions that you have in your accounting system, but it does not match with your bank, which is sometimes any outstanding withdrawals, any bank errors. So it also catches bank transactions that you forgot to enter in your accounting system, which is any deposit that's can be entered at this point in time, where you can park your reconciliation, go back into that matter, enter it, and then come back to reconciling or continue the reconciliation process. Now, if you're doing rather the reconciliation month on month, it means that you're up to date. That's what I just mentioned. If you're reconciled today, as on 31st of July, you are up to date. You are definitely not going to be in any trouble. You're going to be in peace of mind. You're audit ready. Tomorrow you have I don't want to jinx it, guys, but tomorrow you cannot avoid sometimes, but there are situations, but only not to avoid such situations. We are having this webinar. We are telling you the importance of reconciliation. We are telling you the process of reconciliation. And we want to make sure you are reconciling your books, irrespective of the program you're using, irrespective of the method of accounting system, right? But end of the day, you have to make sure your transactions in your financial institution has been recorded on the date with accuracy of amount, with the description, whether this is a settlement payment, whether this is a retainer from client, whether this is a deposit for any mortgage for any real estate lawyers who are doing their closures, or if this is any other withdrawal, right? So making sure the description, the date, the amount, and you have all of these being entered in your accounting system. It is being reconciled up to date. You're ready for the audit. You're ready to file your taxes with CRA because, end of the day, your banks are reconciled. You're ready for paying your taxes. I think there's nothing beyond having your books reconciled and generating your profit and loss account statement, which is because you're having your general account reconciled means your P&L report is also eventually ready, which means you can file your taxes, right? Because it gives you the profit or loss and your tax is being calculated on it, and you will be able to file your taxes. And for your analytical purpose of it, you are able to generate reports with accuracy and also report it with your auditor or with your accountant or with your let's say if you're having a partnership with your partner, or it also eventually boils down to a point where you are able to assess your business hygiene. That is something which will eventually give you a big peace of mind. I don't think there's anything more than that which will let you be at peace or which will let you sleep in peace than having your books and your accounts matching and reconciled. So with that, I'm just moving to the next slide. I think the reconciliation process is something that I just discussed in the last 5 to 6 slides. But in the agenda, we did see about what are the other documents, what is the checklist that you have to keep in your mind to have it generated on month along with these reconciliation reports. I think with the reconciliation reports and the documents that you see here on the checklist, you're completely audit ready. Absolutely, yes. You have nothing beyond it, I think, because this list is pretty exhaustive. It covers your client's trust ledger, your client's general ledger. So a client could pay into your trust. A client can also pay into your general account. So when you download these two, it totally provides you with a ledger for client's trust and general separately. Now, if you want to take for a specific client a file for a single client, you can also do it in uLaw. You have something called client's trust plus general ledger under each matter. Under documents, you can generate that. That's one of the documents that makes things much simpler for you as well as the auditors, as well as the clients. So just download them and I think you're ready to go. See, but if you're downloading a document where the data is not accurate, then that creates a different kind of an issue. That is why we are resolving the accuracy of data at the level of your reconciliation point itself. When your books are reconciled, I don't think any other ledger will have trouble. So that is why the reconciliation takes place after that. I do have some questions coming into my chat. I just request you all to hold probably for another 10 to 15 minutes. I kind of lost 5 minutes in the transition where I had to leave the meeting and join back. So maybe just bear with me for another 15 minutes. I'll try and wind up the session and then answer all your queries. I'd be glad to do that. So coming back to the slide here. So it has a checklist under which all your law society compliance documents needs to be generated much beyond just the reconciliation documents. But for their accuracy, it is very important that you're recording the transaction as it is you see in your bank. All right, so moving on to the actual checklist, we have divided it into a few parts as the beginning stage while you're handling the retainer part, while you're generating your retainer letter. You draw this contract or this agreement with all the points, keeping in mind how the client is going to pay, the method of payment, the amount, or whether it's going to be a billable time or block fee rate, or whether it's going to be a lump sum amount they're going to pay you into your trust account, and then you are going to divide it into your, whether legal fees and disbursement, or is the disbursements going to be charged separately and you're going to recover the expenses later. Such things are to be made very clear while you are entering into an agreement with them. So these are definitely also considered as compliance documents, as they come under the matter level compliance. They are not financial management compliance, but they are matter level compliance. But again, capturing those amounts into respective bank accounts falls into the financial management compliance, which in turn comes into your reconciliation process. Again, raising invoices. So invoice becomes another compliance document. So it's very important that you follow a timely manner of invoicing and recording the taxes, whether you're recording the taxes as per your province and you're able to collect the taxes and remit to the government on a specific time, whether it's quarterly based or annual based. You're able to follow all such nuances here while you're entering everything into the ledgers, respective ledgers. And moving ahead, once you have raised all the invoices, you have the balances that the client needs to remit, whether it's going to be collected into trust or whether it needs to be captured into your general account. You again follow your bank, making sure that you're telling your client the method of payment you want them to be paying it into, and at the same time the account that you want them to be paying into, and whether you are issuing a receipt for it, and ensuring that the amounts that you have received in general is equal to the invoice that you have raised, or if it's a lesser amount, do they still have outstanding and that you have notified them the same. As it all forms part of your invoices, AR balances, and what you are able to collect and reconciling with your bank, everything is pretty important there for you. And finally, handling all the trust documents, whether you're maintaining the client's trust ledger or client's general ledger, having all the trust receipts, any payments that you receive into trust, any disbursements or any other trust payouts that you're making, you have all the Form 9As generated because you're doing electronic fund transfers from your trust account, where recording all your Form 9As is very important, and you're easily able to generate if you're using an automated program like uLaw. Even if you have forgotten to generate it, or if you've missed, you can always go back and do that in a program like ours. And lastly, also maintaining the general account and ensuring that the payments, which are client payments and other receipts and disbursements and office expenses, more importantly, I know that's one of the most least maintained or least important areas, but because it's your money ultimately, right? But I think it should be provided equal importance, like I already mentioned while talking about general reconciliation, and capturing all the data that you need in your general account or you see in your general account in your financial institution statements are considered to be very, very, very important. It is to be recorded, which is captured, and reviewed, which is when you do the comparison, and reconciled, which is when you do your monthly reconciliation. While maintaining these records, taxes are received, taxes are paid, and you're also maintaining the respective tax report to maintain and make the payment accurately. So I think with that, you all have a fair idea of what is the legal, system that is best, legal accounting system rather, that is best, and how well this can be managed with the time that is available, because this definitely shouldn't eat up all the time, because end of the day, you're all lawyers or paralegals, legal professionals who have who's having to devote more time towards your profession, while doing this shouldn't be your only profession, right? So you need to dedicate your time towards your actual profession and make sure maintaining these records do not eat up your time, but at the same time they're accurate and good enough for you to complete the reconciliation in a timely manner, so that you can be compliant as a legal practitioner in front of Law Society. So every entry is a double entry, which means that you are maintaining these records that basically touches various accounts. There could definitely not be less than one account that if you're getting money deposited into trust account, you have the bank account and the client's trust ledger both getting affected here. So it has to be having all these records to touch, when to touch, and what to record is very important. And sometimes the same information is recorded several times, so there could be more mistakes that is being committed, and it could take time to rectify it. So to avoid such things, be more careful while recording a transaction and ensure you maintain a checkpoint once it's reconciled, or once it's recorded, you at least do a preview reconciliation and you're aware what is there in this client's account. So for seamless accounting, just make sure you record the transactions in a timely manner as to what happens in your bank. Each matter or file is being maintained separately, and translating all the transactions that you're recorded into your reconciliation items, which helps you prevent errors and reconcile the data when the event actually takes place, and also maintaining these ledgers and journals of respective matter, and keeps accounting data flowing into the respective months, and anything outstanding is being recorded, so that in the next month you will be notified that it is being outstanding from the previous month, and you can follow up with such data. This is an example that I feel is important to keep in your mind, so that you don't miss out on any outstanding withdrawals or deposits. That's a key thing for reconciling your accounts. Just imagine you don't know what is outstanding and you try to go and clear all the transactions, but in the bank you only have out of 20 transactions, only 15 have been seen in your bank statements. But in uLaw or in any other platform that you're using, you have 20 transactions recorded, which means the 5 of them are outstanding. So you definitely need to keep a track of what is outstanding at your end. So that will save you a lot of time while you're reconciling. Otherwise, you don't have to track down on all of those items to understand what has happened behind, right? So that is actually, honestly, the benefit of having a legal accounting software. It lets you record events when and as they happen. So that way, you don't lose track of what has happened in the past few days. And you don't have to literally keep everything in your mind while maintaining these financial records and bank records. It's totally aligned with each other, making your reconciliation work not only sound simple, but also is actually a simple task. Trust me, reconciliation is a simple task if you follow all those that we've discussed probably in the last 55, 60 minutes. And finally, it's all about being compliant and being accountable to your clients, respective clients, to the auditors, to your accountants, and to yourself also for the analytical purpose of it. And lastly, the ease of use is definitely developed over a period of time. It's not within days, it's not within the time period, but it's within the time in which you are able to hear. Oh, wait a minute. Sorry. Is everybody hearing me? I see some comments saying you cannot hear me. I hope all of you can hear me. Can one of you confirm? Okay, great. Thank you. So I only think a couple of them dropped the call by mistake. All right. So yeah, it's all about compliance, accountability, analytical purpose, and the ease of use. So choose your software or choose the method of accounting that you want to use in a wise manner so that you save time. At the same time, you are able to arrive at all those that we discussed within probably few minutes, even though your volume of transaction is high enough. Now, there are a few links that I would probably post here in your chat box towards end of this webinar. So if you are currently using uLaw, I'm just going to take a minute to showcase how well you can, take a look at your accounting system. So that being said, I always like to start with accounts. I mean, of course, you have probably recorded a few transactions at your end. You have a new client, you have a new matter. I'm only using uLaw as an example because this is what I have with me. But whichever accounting program that you're using, or if you're using manual method, you still have to just make sure that the transactions are recorded under the respective client's matters, whether it's disbursements or retainer. I always like to follow my bank. So I go into the respective tabs that you see here, trust and general, and I follow whether it's a deposit and withdrawal or it's a deposit and withdrawal again into general. Record the transaction at the client level and then go into accounts to record any office expenses or any bank transfers if I've made credit card payments or stuff like that, or if I have paid myself, which is drawings or salary, these are all some examples that I can think on top of my mind. But I'm sure you would have a set accounts or set type of transactions that takes place in your accounts in trust or general respectively. So follow them, record them. Once you record them, the reconciliation and the compliance process is pretty simple. The reconciliation takes place from the reconciliation tab. The moment I click trust, this is a practice account. So it'll have quite a few transactions, but I'm just going to show you from the preview that you enter the date. Remember the date on which you're going to reconcile. Then you enter the bank balance. You clear the deposit or the, your payments, which is basically any receipts or any withdrawals needs to be cleared here respectively. And anything that is outstanding, you leave it out. And then you will, if there's any bank error, you can enter it in the bank error field. And lastly, you will see the reconciliation button. Beside that, you all see there's a tiny preview button beside cancel. So this is where you could park your reconciliation so that you can enter any missed entries and come back and resume from where you have parked your reconciliation. Okay, so just to recap quickly, start with the date on the top. Step number 1, always assume that today you're going to reconcile for 31st of July. So you start with 31st of July date on the top in the date box. And then the second box you see is where you're going to enter your balance as per the bank statement. And once you enter the balance as per the bank statement, you can start clearing the transactions that you see in your bank statement, which means any outstanding deposits or any outstanding withdrawals are being left out and the rest are being cleared. And the moment you clear it, you are going to see the reconciliation button up. Like I said, mine is a playground account, so I'm having probably tons of transactions that has not been cleared. So that is why it took so long. But you just quickly enter the date, 31st of July. You clear the bank transaction with the balance as per the bank statement, and then you'll have the reconciliation. And here you see the preview here. So once you click on the preview here in the bottom right beside cancel, you will be able to park, reconcile, or preview reconcile it. So that was the reconciliation part. And you also have the compliance part under the compliance tab. Like I said, mine is loading accounts from probably past 1 year since I haven't reconciled. This is a playground account, so it's probably why it's kind of taking a little time. But yes, make sure to reconcile your accounts on monthly basis, and make sure to leave out all the transactions that is not showing up. And then once you're reconciled, you will download the reconciliation statement, put it in your folder so that you don't lose it. And then you come into compliance, monthly compliance, and download all that you see here until the reconciliation, until Form 9A. So you could just choose to download it for monthly or for daily, for today, weekly. So you can just choose the time period and download all that you want. I think these are the two major tabs that you see under accounting tabs. So with that, I think I wanted to just showcase these two tabs to you all from uLaw, that it's possible. There's preview reconciliation, park reconciliation, which also we saw right beside cancel tab. I encourage you all to use that. But at the same time, if you all have any questions, please do reach out to us on support. I'm sorry that I took 5 minutes more because I had lost the audio communication in between, but I'm just getting back to one of the questions from here. The problem is from one of the clients have asked how to reverse an error the day after the reconciliation was done. It's very common that errors could happen once you have reconciled. We do have undo reconciliation button here. You can become an admin here, and then you can undo the reconciliation. It's just that you have to make sure you're in the right account. If I'm in the account that I have to do for trust, if there's something that I have to, don't go to pool trust account, go to something called trust amount clients, which is right here at the bottom. Below other liabilities maybe, and once you go to trust amount clients, you can actually undo the reconciliation. If this is for a bulk reconciliation, but if you're looking to do undo reconciliation for a specific item, when you click on that specific item dollar symbol, you will see if it is reconciled, you will see there's an undo reconciliation button here on the right beside the date. So you can undo the reconciliation and fix the error and re-reconcile that specific entry or that entire month itself. Yes, you can do it. I'm not sure who is this, a client who's asked this question. Unfortunately, I don't have the full name, but if you could email us on support@uLawPractice.com, I would be more than happy to assist you with this question, with the video. And I'm going to quickly stop recording the session, but I thank you all for joining in today's webinar. It was pretty easy. I'm sure that all of you have benefited out of today's webinar. Please do stay back for more questions. I'm just stopping the recording, so anyone who's going to view it later is not going to, crib about more than 1 hour length of video. Okay, just quickly stopping the recording, guys. Thank you.